Money Vikings, welcome back. I got a really good one for you today. I want to talk about this Tom Lee. I'll show you this in a minute. I want to talk about Tom Lee at Fundstrat and basically the stocks that he talks about that are going to make a person wealthy in over the next several years, so up until about 2030. So I want to talk about this because he is a very interesting person that you should probably be following. And one thing I really have appreciated about him is, number one, his predictions, which are, okay, I'm not into predictions, but his analysis and predictions have been spot on over the years. He is one of these guys that has always said that the S&P 500 will continue to climb, will continue to do very well, in spite of many, many billionaires that you'll see on social media, YouTube, the cable news networks, that will constantly tell you that the sky is about to fall, everything's about to drop, everything's overvalued. Famously, the guy from The Big Short movie. And there's many others that have come out over the years and have just made this sort of doomsday predictions, you know, the rich dad, poor dad guy, etc., Kiyosaki, just on and on about, you know, everything's overvalued, everything's gone too high, everything is going to fall, you know, everything's over. And I want to talk about why there is a counter argument to that. And actually it's been right. It's actually been correct, the counter argument. So it doesn't mean don't think about your own risk tolerance. It doesn't mean we shouldn't be diversifying into uncorrelated assets. It doesn't mean that we should believe that the S&P 500, for example, will always go up. Yes, there's going to be bumps in the road. There always have been. You look at the chart of it over the last 100 years, but we do enter these certain cycles. So I want to talk about this and share a few clips from here, and I'm going to pause it as well and talk about why it is important to utilize what he's saying in terms of our wealth building. And let me, what am I looking for? I'm looking for this right here. This is the next thing I want to show you, this chart real quick. So the REZ wealth building tool here that we developed at Money Vikings, what's important to see here and to know is that what we say is we talk about what you will need to save every month to be a millionaire in 10 years, 20 years, 30 years, or 40 years, right? And the reason this is important is because, I'm going to zoom in a bit more here. Okay, the reason this is important is because you cannot build this kind of wealth without growth. You need investing longboats that are going to have good returns and good yields and good compounding. If you just try to do it by savings, it's not going to work because savings is too slow and saving gets eaten up by inflation. So my point here, as I'll go into the Tom Lee thing in a minute, is that in order to, like, for example, if you want to be a millionaire in 10 years, you have to save $4,900 a month and you need to be getting a 10% annual return. Well, the only way to get a return like that is typically equities of some kind. And that leads me to some of this. So let's play a little bit of this clip and we'll talk about it.
Great to see you, Brian.
You have not been drinking?
No.
Okay.
Not recently.
Not recently. 15,000. I'm just going to sit here and listen.
Okay. Well, there's a couple of reasons behind this. One is this would be the third time that stocks entered a cycle where annual returns compound at high teens. You know, you had the roaring 20s, and then you had the 50s through the late 60s. Mm-hmm. And this is a third cycle. They all coincided with a surge in the number of people aged 30 to 50. So in other words, the number of prime age adults. And this time it's powered by millennials and Gen Z.
Okay, so it's a very interesting point here, and that's something we've talked about on Money Vikings before. This is why I never bet against the U.S. Demographics are in our favor. If you watch people like Peter Zion and others, you will learn about the demographics of the United States versus the demographics of other parts of the world. We do actually have a very large youngish population in their 30s, the millennials and Gen Z. That is not the case for many countries. China is about to fall off of a demographic cliff with very few young people, a lot of old people. There's a lot of countries in old Europe that are much older. Germany, they're falling off a demographic cliff, and several others. So the United States isn't quite at that point. We actually have some more room to kind of figure this out. But you need those people in those middle years who are the high consumers of all the products from these great companies. Okay, so that's demographics. The next thing, okay, while this is loading, so apparently I'm going to have some, internet issues as I'm trying to...
Ask the man himself, because...
Coincided
Okay, here we go.
with a surge in the number of people aged 30 to 50. So in other words, the number of prime age adults. And this time it's powered by millennials and Gen Z.
So is this the law? Okay, so math. I wasn't not great at math, but I'd like to think I know a little bit. Big numbers get bigger faster. That compounding.
That's right.
And you think there's that, but there's also this massive wave of people about to enter their peak earnings years.
Yeah, so it's a...
Demographics.
Exactly. It's a demand story, meaning when you get to your prime years, 30 to 50, Urban Institute shows you start to borrow more money. You're making big life decisions. This is what powers the economy. On top of that, we have a really a big opportunity for U.S. technology companies because of AI, which is supplying the global digital labor because there's a global labor shortage. So these two forces are combining to, I think, power almost a decade of extraordinarily good stock returns.
Do you have...
So it's really interesting. So he's saying that you have a really good decade of the S&P 500. That's really good news for those of you even at the beginning of your investing journey right now, because that'll mean you'd have a 10 years at least of really good compounding and really good growth. You can do a lot in a decade in terms of building your wealth. The second thing I want to add in terms of demographics is touch upon what Tom Lee said about AI being the workforce of the world. There's a shortage. So there's a geographic advantage of the United States and of the S&P 500. I put those two together because the S&P 500 is basically a conglomeration of the strongest U.S. companies. So there's a lot of demographic advantages of the U.S. with a huge cohort of people that are in their prime earning and consuming years. And then there is also a geography element where we have very good geography. We have very good, we have immigration. We have a lot of good situations in terms of natural resources with our geography. We're very well defended and fortified and protected. It's also a very large country. There's a lot of resources, a lot of mass. And so that's going to help as well.
Is this because we're the United States? I mean, and do you expect that a lot of money from around the world, because China's got massive demographic issues, Germany shot itself in the foot with all of its energy problems. Will we be helped by a lot of money coming into America, or does that have nothing to do with it?
It's actually both. I think that there's going to be a lot of dollars spent on U.S. technology product because the world is short 80 million workers by the end of this decade. That's roughly $3 trillion of labor shortage, of labor salary that's turning into silicon. So that means U.S. suppliers of silicon and AI are going to have a $3 trillion revenue run rate. On top of that, if U.S. companies are growing earnings at this speed, the PE multiple of the U.S. should go up, and that's exactly your point. There's going to be capital flows into the U.S. And where else in the world do you find the best and most important technology companies? They're all basically in America.
So the U.S. will also be advantageous because a lot of, as he's saying, capital will inflow into the system. So that's going to be another thing that's going to buoy stocks and the market. So it's a strong system. The demographics are good. The geography good. And so it's a good thing in general to have exposure to these things. I like through the S&P 500, through the VU, that type of stuff. So something to keep in mind. Let's watch a little more and we'll peace out on this one.
Well, here, I mean, it is amazing to me that NVIDIA alone, folks, NVIDIA by itself is worth 50% more than the entire German DAX index of stocks combined.
Yes.
The 30 biggest companies in Germany, or 33, however many are in the.
It's like Warren Buffett says, don't bet against the U.S. Thanks for watching. See you on the next one.